so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, you guys. As we get more and more data, we're starting to see the negative effects of mass migration into once affordable metro areas. And what this is doing is basically causing those metro areas to become much less affordable. Now, I look at Austin, Texas as the new Southern California because there is such a high migration going into Austin, Texas that it has drastically inflamed everyday living, right? So prices not just on homes, but also just everyday living on food and restaurants, goods and services and things of that nature. So today we're going to really analyze the trend of those metro areas, and we're going to talk about how much longer will those metro areas that are affordable be affordable, and how long will it take for them to become unaffordable. So what we're going to do is we're going to deep dive into a Redfin article titled "Migration Hotspots in the Sun Belt Are Home to the Nation's Highest Inflation Rates." Now, you guys, this is essentially is absolutely brutal if you're one of the locals or you're one of the natives that are in one of these more affordable areas, right? So we're taking an absolutely brutal hit, and I'm in Houston, which is a very, very affordable place and also a very highly migrated area. So I see directly the impact that this is having on the locals here in Houston, Texas. Now, we're going to get started on this article, but first, remember, these vlogs that I'm doing are just my opinions that I'm sharing with you. I am not a financial advisor, even though my career is a loan officer in Texas, a realtor in Houston. But again, I'm just sharing with you guys my experiences and my opinions. And if you could, please like this video, subscribe to my channel if you haven't already. And as always, please comment your insights, your experiences, and your knowledge in my comment sections. You have no idea how many people you're helping, including myself. Now, let's get started on this article right now. Okay, the article starts. An influx of people moving into Phoenix, Tampa, and Atlanta has led to rapidly rising home prices, one contributor to outsized inflation in those areas. Those Sun Belt metros are still relatively affordable, but scores of new residents and high inflation means the financial benefit of living there is diminishing. Some of the hottest migration destinations for homebuyers, Phoenix, Tampa, and Atlanta, have the highest inflation rates in the US. In Phoenix, prices of goods and services rose 10.9% year over year in the first quarter on average, the highest inflation rate of the metros in this analysis. Phoenix was also the second most popular destination for homebuyers looking to move from one metro to another in the first quarter, beyond only Miami, according to Redfin's migration data. Atlanta, the 10th most popular migration destination, had the second highest inflation rate, 10.6, and Tampa with 9.9. That's wild. With Tampa 9.9 increase in prices, clocks in at number 3 for both inflation and migration. So for me, you guys, Phoenix was actually kind of a big surprise, being that it's the second highest migrated city in the US. That's a big surprise for me. But remember what I'm saying, and remember what this data and this article is saying. Not only is the mass migration leading to much higher home prices, it's also increasing the cost of everyday living for example, goods and services, right? So there's a lot of adverse effects from that mass migration, right? And again, like I'm saying, guys, this is totally beating down the locals. And I've seen this firsthand. There's a lot of potential homeowners right now in my area that are super frustrated and actually kind of developing a type of hate for anyone that is not a native Texan. Now, I married a local Texan, so I was married into being a Texan. So don't hate on me. Let's continue this article right now. Okay, guys, so here's the first thing we're going to go over as far as a chart. Now, this chart is inflation and migration in Q1 of 2022. This red line here essentially represents inflation, right? So this is inflation growth from 5% up to 8.5%. And I believe the national average right now is 8.5%. This line is going above 9%. So I believe national average, we're about right here. So about where Dallas is at, right? But look at this. Now on the bottom, from left to right means, for example, San Francisco, roughly 50,000 people left San Francisco, right? And roughly 20,000 people went to Miami. And that's what you're seeing on the bottom here. But what's really intriguing, you guys, is look at the highest migrated cities, Miami and Phoenix, right? So Miami and Phoenix, some of the highest. Now they're greatly over the national average of inflation, over 9% and over 10%. Tampa, Florida, also over 9%. Atlanta, Georgia, over 10%, and some of the highest migrated areas. So you can see a direct correlation between mass migration and inflation, right? And, the exodus, like New York, a lot of people are leaving New York. A lot of people are leaving Los Angeles. New York is well under national average inflation. Los Angeles is right about at national average, right? It's at about 8%. Seattle, Washington, also above 8%. And a lot of people are leaving. So it doesn't necessarily mean mass exoduses from certain cities. Not all of them are going to have lower inflation. And not all of the cities that have high migration will have higher inflation. For example, look at Houston. That's where I live. Now, Houston, high migrated area, but they're under 8% of inflation, which is still high, but they're under that average, right? Same thing with Dallas. Dallas is at about 8.5 inflation, but that's also a highly migrated area. So it's really interesting to look at these trends. Look at Honolulu. This is a huge surprise. There's apparently a mass migration or some type of migration to Honolulu, Hawaii. For obvious reasons, I can see why people want to live there, tropical paradise, but I've been to Hawaii a lot, and it's not the best place that I have, in my opinion, to raise a family. And that's why I would never consider moving to Honolulu, Hawaii. But let's continue. Another thing, look at Chicago. So there's still a lot of people leaving Chicago. That's maybe why their inflation is only above a little bit above 7%. But, as you guys can see here, there is a direct correlation between mass migration and inflation, not just on housing prices, but goods and services as well. So if you are one of these people that moved from an expensive metro area to a less expensive metro area, definitely show love to the locals, because you may be moving into one of these once affordable areas and those locals may not like you. Now, the question is it justifiable, right? Do you think they have a right to be upset at people migrating into their affordable areas, making it more expensive? Comment below if you think that locals have a right to be upset at people migrating. Personally, I kind of think it is what it is, but I definitely understand the frustration from the locals. But I definitely also think it's smart to move to a more affordable area, especially if you can live from home. But you see, there's pros and cons of both. Let's continue reading this article. This article starts, the good news is that because most families own their home, they're building wealth from rising home values. Even if they are paying more for everything else, there's also a bright spot for prospective buyers. I expect competition to slow down in the coming months as mortgage rates rise and some buyers back out of the market. And wage gains are likely to continue increasing. But are they? Especially if there's a recession, are they really? Continues. This article continues. Home prices are skyrocketing in America's most popular destinations, partly because so many people are moving in. A record share of home buyers relocated in the first quarter. Rapidly rising home prices are one contributor to inflation. Now, I will add, you guys, that this is absolutely good news for buyers that are preparing. And remember, that's why I'm doing these vlogs. That's why I'm sharing these opinions, not for you to just be paralyzed in doom and gloom, but for you to prepare for difficult times ahead. Because I believe, again, this is good news for the people that are preparing or that are already prepared, like myself. Let's continue and finish out this article right now. Something to consider, you guys. The financial benefit of moving to relatively affordable areas will eventually diminish. And I'm going to wrap up my opinion based on this right here. But let's continue. Although the national housing market is showing signs of a cool down, Sunbelt metros like Phoenix, Tampa, and Atlanta will remain attractive to out-of-town homebuyers. Pandemic-fueled remote work is here to stay, and people will continue to sell homes in pricey coastal job centers like San Francisco and Seattle in favor of comparatively affordable, warmer metros. But the trend may slow in the future as the financial benefit of living in a place like Phoenix diminishes. Homes are becoming less affordable more quickly in some belt metros than in coastal areas. Home buyers in Phoenix, for instance, need to earn 46% more than they did a year ago to afford the area's typical monthly average mortgage payment, compared to 26% more in San Francisco. So you guys can see that this inflation and these overvaluations are essentially not grounded in economic fundamentals. And that is why I keep saying that I believe we're going to be into a crash. I don't believe that the Federal Reserve is going to be able to help us move into a soft landing. I believe that's why it's going to be a crash, right? So I'm going to end this video on a couple opinions that I want to share with you, and I want to get your comments right now. Now, obviously, essentially, these areas that are affordable right now are essentially going to be becoming less and less affordable as we move on. So if you guys can, I want you to comment below and tell me how much longer do you think places that are affordable right now will remain affordable? How much longer will that last before those places are now unaffordable? Example, case in point, Austin. 3-4 years ago, Austin used to be so much more affordable than it is today. The magnitude of how much inflation has exploded and how the housing market has exploded in Austin is quite frankly astonishing. And of all of the cities in Texas, I am most worried for Austin because of that very reason. Now, the last thing, you guys, is I really feel like the next flip in our housing market may be the last opportunity for us small-time investors to invest in rental properties, right? So when the market turns, so if the market crashes and home prices come back down and it's time to buy again, that may be our last opportunity to really get good deals as far as investing in real estate. So you guys think about that. So if you're not prepared right now, it may be really, really bad moving forward, right? But if you are prepared right now, it may be a really good thing. But in my opinion, it has never been more important to prepare right now because we may not have another opportunity like what we're about to have. Do you guys see my point? So again, build your credit, get out of consumer debt, save your money, and prepare yourself, because if you don't, an institutional investor will. Remember that, right? So continue to empower yourself, guys. Now, that's going to conclude this video. I really appreciate you guys following the data with me, analyzing certain economic factors so that we get a better idea of how to navigate through this housing market. Now, as always, you guys, if you're out there investing in real estate, I wish you luck and I hope you win.